this to the computer. So once again, I really want to talk about confirmations, and I want to talk about how you get these confirmations and why you get these confirmations. A lot of times people are just not focused on the actual mechanics of what they're trying to do with their trading. When they look at their charts, when we take a look, say, at GJ as an example, like you can see where, you map out your major price levels, where you take a look and see where things are going. And now people are saying, well, let's see, we go to the 4 hour, we're at 148, it's rejecting, so now it has to go down. The thing is, that's the worst type of trading you can do when you say, well, it has to go down now because it's rejected this level over to the left here. That's not confirmation, okay? That is not how you trade. You can't say, well, because we're rejecting that we're going down. This is just a pullback potentially for a further move up. You need confirmation, and you need confirmation. What I mean by that is you need to figure out what your comfort level is in terms of looking for confirmations with a trade that you're doing. So as an example here, right, that we went down, but this single candle here may not be enough confirmation for you to take the trade. That's okay. We're on a 4 hour time frame, so that's a pretty big rejection. But when we're looking over here, we don't have the same information that we had over here. This is a pain point that a lot of people have, and I get everyone's telling me, because they look at this candle over here and they're like, oh, we're going down now. And that's not true, because we had rejection over here. We're at a support level over here. Maybe we're still going to continue up. Or when we get over to this level here, we have resistance. Oh, we're going down now. You can't do that when you're trading. You have to determine on your time frames. If we look at a 15-minute time frame as an example, right? Here's your 15-minute time frame, and here's basically all what we're doing. So basically, here's today's movement. Okay, so forget about all this. Here is today's movement. At what point were we going down? This section here is not confirmation that we're going down. We have to break these levels here before we go down. But more importantly, here are your range. Here's your range. You can see right there to there is your range for, once again, resistance and support. You have to identify this, and you have to trust your analysis. So when you trade, you have to say to yourself, okay, I understand that this is a potential resistance area, this section here. So if I'm in a trade over here, and once I get to this point here, I look across and I can say, okay, time to exit. That's okay. But if we hold the trade and we get to point here, okay, maybe it's time to exit. But once again, it's your risk tolerance. So you're looking at a 15-minute time frame. Maybe now if we turn around and we jump into the 30-minute time frame, you have the same sort of items, right? So we have the same sort of resistance level right over here, right? So we can all agree that this is a resistance level. This is a resistance level here, right? Because we have rejection. And, potentially this could be a resistance level. So when you're taking trades in this section here, when we take a trade, if we're in momentum and this bounces off this support right here because this is a previous resistance level, we're going up. You have to trust the process to say, hey, we're going to probably reach this level here. We don't know when or we don't know how, but once we break this resistance level, this line across here, we're probably going to hit that level. But that doesn't mean you hold trades up until that point. You don't have to. You can exit before that. But more importantly, now you're not taking trades. We're not taking trades at 3 o'clock in the afternoon going, oh, well, we've just rejected this level here and now we're going back down. It makes no sense. This was your move. When you're mapping out your charts, that's the move that you're looking for in the middle of the session. If we turn around and we look at, say, USD JPY, right? So we look at the 4 hour, same idea, right? So I had a minor support at 109.310, major support at 108, and major resistance at 110. once we broke that resistance, we're up, right? Because you have 1, 2 candles. But more importantly, if we take a closer look, and these are things that you have to look at and you have to take a really close look at. Look, here's your section from today, right? So if we want to draw this out, we'll say that this is New York session today. This area here can't trade. We have to wait for it to break out. Why? Because we could still break down. So similar to what I had said earlier this morning when we looked at the 4-hour candle, what did I turn around and say? We have to break this level, right? So when we go back to what I did over here, here you go. We need to break this, otherwise we could drop back to 110, right? So if you turn around and you look, here, this is your level, right? We need to break this on the 4-hour, otherwise we're going back down. What happened? We broke it, and now look. We broke 1 4-hour and 2 4-hour candles are going up, but more importantly, when you look left, I don't see anything. There's nothing here to give you information to say, hey, we could be going down. So now what you do is you can zoom out a bit, but more importantly, shift up to the daily. And now you can see I already have my previous daily resistance at this level here at 113,297. So now what do we think? Okay, so this is where you visualize. You know that this area over here is a price level, right? So you see where we had those taps and rejections. You can see it's coming into that level there. So what could possibly happen? We come up through it, pull back down, and then we continue up. But just because we pull back down doesn't mean that we're going back down to support. We have to wait. You need confirmation. So maybe at this point, the next daily candle forms a wick. Maybe it goes down right back to this point right here. Maybe it goes right back to these levels here. We don't know that. But if we don't get another confirmation of a candle going down, it's more than likely going up. If you turn around and then you say, okay, well, great, I understand that, but look at the weekly, same thing. Weekly now has broken out, right? Because we can all agree that this was consolidation, right? Up, down, up, and then finally push up. So where are we going? Probably to finish over here. Why? Look at this candle here. What is this candle most likely going to do? Probably push further up. The next daily candle will create a wick. Why? Because most JPY pairs create wicks, and they create wicks down, create wicks up, and you eventually get to that point where we'll get to that next level. Okay, so when you're looking at confirmations, you have to really evaluate and say, okay, what makes the most sense when I'm looking for confirmations? Because a lot of people, you know, when you do analysis and when you look at information, you're trying to trade things too fast. You're trying to say, hey, I need to take a trade now because we're going down. So as an example, if we look at GJ, right? So GJ flew all the way up. We know that it flew all the way up. Look at the daily, okay? And this is what I keep trying to tell people. Look at the range on the daily. We had 147 to 140, so we had basically 70 pips there. But look at the range here. We had 147 to 145. We had basically, 140 pips? Or sorry, 180 or 220 pips, is that right? Yeah, about 200 or 180 pips at this point. Right, so you had 180 pips in this range here. You had lots of time to take trades to push further up. When we come back down, it'll be the same thing. You'll have the same opportunities because you can see what's happening. Let me change the color of this so it's a little bit easier to. You can see what's happening over here. You can see right away, right? Down, up, maybe we go back down again. But you can see that you have these ranges and you have this space. So you don't have to hurry trades. You don't have to worry about looking at you know, oh, I need to take a trade today. Yesterday it ranged. You didn't need to take a trade. Now, if we turn around and we look at the next level, right? So we say, okay, Here we're at resistance, right? We can all agree we're at a resistance level. We look across, lots of taps over here, tap over here. So we're at a resistance level. So now what you have to do is you have to think to yourself and you have to say, okay, if we are going up, how are we going to go up? Okay. So when you think about that, first of all, draw where you think maybe a resistance level was going to be. So let's take a look. I'm going to do this right now in front of everybody just to get an idea. So I start going through, okay. Oops. So here you go. So here's a resistance level I've drawn. Is it right? Don't know. Why? This looked interesting to me. There was like, 2 wicks there, all these wicks over here. We had all these wicks over here, and then eventually we had rejection over here. Okay, so where are we at? 148, 865, 147, 921. You're looking at about 90 pips. Okay, sorry, that's not a good 9. You're looking at about 90 pips. But if you look at the way the candles form, look how violent they are. Look at how violent these candles are. So let's zoom in a little bit more so we can actually take a look. Okay, so we're going to the next level. We've all agreed that we're probably going to go to 148. When you look at these candles, look at that. Look at this. And then finally, this push all the way through. So when you look at stuff like that, you have to expect the next candle will probably drive down and then continue up, right? So when we see that information and when we look at the way these candles are forming on this pair because of how violent it is and the way that it moves, you have to understand something, that you're not going to get an accurate movement in every candle. But if we're trending in this direction, more than likely, what are you looking to do then as a trader? Okay, great. I'm going to start taking buys at this point here, right? If this doesn't fill and this starts to pull back, I know that the next candle will push down and then push up, right? So the candle will end up looking like this, right? We've all seen that candle before, and then what does it do? It shoots up, right? And then suddenly that candle starts to move. Why is that a good thing for this area here specifically? Because when we look to the left, we see a huge candle that pulled all the way down. So that means that we have this space in this area here. And we can say, okay, that makes a lot of sense. We can continue up. Now, you say, great, Ted, you showed me on the daily. Now show me on the shorter time frames how I can do this. Okay, here's how you can do this. Looking at what we had. Steps. Look for these steps, right? You can see how these steps are being formed. Look for these steps. This, if it stops you out, oh well, not much you can do, right? There's not much we can do when you get stopped out. Oh well, right? Shit happens. I guarantee you there's going to be another candle that's probably going to do this. And it's going to come into this area over here. Oh well, there's not much you can do because of the way that this pair is on cocaine all the time. It moves very hard. So now when you look at this and you say, oh, well, Ted, we're going down now because see rejection, 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 you have to then turn around and say, what time frame are we looking at? 15 minutes. Does that really give us any confirmation? Probably not. So you don't have to worry about that. But what you can say now is you can say, hey, we're coming and we're tapping this that resistance turn support. Now, if we don't break this, we're flying up. And then what do? We set our trajectory on the higher time frames. We start looking at the higher time frames and we say to ourselves, okay, where are we going to? How are we moving? All right, we've got rejection here. Maybe that 4-hour wick is going to fill and it's going to push all the way up a little bit further. But first stop on the 4-hour fill will probably be right over here, right? Look at all those rejection areas right there. These are the keys. When you're trading, these are the things that you're looking for. You're thinking to yourself, you're thinking like your opponent. Your opponent is the charts. If I was to chart, where am I going to go to and where can I possibly pull back to? Or where could I push through to, right? We know that this level here, look at all the rejection. We know ahead of time that when we get to this point on GJ at the 4-hour, that there's going to be trouble. We can see it in the past. You can see it in the present. You can see it currently. You can see all that information. You have to use that to your advantage. You can't let greed take over. You have to come to the conclusion that, hey, if I'm going to get to this point over here, I need to break this area over here and we need to be continuing up, but I have to set my risk and I have to set my reward appropriately so that I don't have any issues when I continue through. Because when you start mapping out your trades and you start looking at your zones, look at the next one that pops up. Here you go, 149. It seems like every 100 pips, there's resistance. So we know that. So we know that there's always going to be a big bounce and a big range over here. So when we drop into the shorter time frames and we start to see how things are moving, you can see even on the 5-minute frame when we looked at today's trades, right? So you can see where I got out today when I took those trades. You can see this candle here ripped right down. I held. Why? Because if we don't break, if we tap this support and we don't have another candle that's going to turn around and break further down, then we're going right back up. Why? Because GJ is very violent in its movements. You can see now what happened over here. Support was created. This candle here was your key pushing up. This candle here was your next key pushing up. You can start to see where the market's going to start to move to. And you as a trader have to make the determination of, do I take profit over here? Do I take profit over here? Or do I go for the big one and go straight up to the top? That's what you have to look at as a trader. So if I'm in the trades over in this section here and I'm expecting to go up here, you can see how many 5-minute candles we have here, like 10, 20, 35-minute candles. So you're basically looking at, what, about 150 minutes, so 2 hours and 2.5 hours of movement. So when you're looking at these movements, you move to your hourly time frame, and you can see on your hourly time frame, you've got 3, 2, 1, 12, 11, 10, 9, right? So 9 o'clock, 8 o'clock, we have these movements going up. So this is your support. You're watching those trades. More than likely, we could come down to this level again, right? And that's essentially what happened. We did come down to that level again. But you can see right over here, it's come down there multiple times. So if we don't break it, we're okay to continue going up. That's what you have to look at, and that's what you have to visualize and say, when you're trading, if I'm taking trades to go up, my stops have to be over here. I can't put my stop over here. This doesn't help me putting my stop over here because look, this is resistance. We need to make sure that we fully break this support. Sorry, this is support. We have to fully break this before we start moving down. But if we tap it multiple times, that just means we're getting liquidity to go further up. So you have to keep that in mind as you're trading. All the time as you trade, you have to understand those elements. All right, let's see. Yeah, it's uploaded. It's being recorded. All right. So now looking forward, if we look and we say to ourselves, okay, where do we want to look at for tonight as an example, right? So we're looking tonight as an example. Let's look at UJ for tonight as an example. Nothing on the daily. Here's your daily, right? So we've got nothing on the 4-hour really because we can't see anything. So what do we expect on the 4-hour? So we have a bit of a pullback over here. So what do we need to wait for? We need to wait for continuous movement, or we need to wait for a candle to start forming to go down. And where more likely are we going? Probably over this area here, back to test this area here. So you have to understand exactly what the market could possibly do, because you can see here, we tapped resistance, came all the way down, came back up, tapped it, and then finally broke it. Okay? Over here, came up, flew back down. So maybe now this is the top part of our zone now. Maybe this is a new zone. We draw out this zone here, and now we start to go back down to this support now that was once resistance, and then we continue back up. So you have to be able to understand those dynamics of the chart, and you have to say to yourself, what makes the most sense as you're trading? Okay? If you're going to turn around, and I was talking about this last week in a lot of the webinars, and I was saying over here as an example, buy all the way up, right? Buy all the way up to, 148 because I had all these marked up, right? Because look at the weekly. So if we look at the weekly candle, here you go, right? So remember last week we had this area here and we needed to get to that point right there, right? But more importantly, we had to fill these wicks on the weekly. If you're going to hold on the weekly, you just got to basically look at these candles. So now you say to yourself, okay, well, what do I think is going to happen? Where's our ultimate goal? Probably up here on the weekly, right? When we look across, if we're going to go bullish, we're going to go right to that level there. We're going to fill this area here. We're going to come up to this resistance here. But more importantly, we've tapped this resistance level on the weekly. Okay, so we've looked at, it's Wednesday, so we've got 2 more days of trading, but we tapped resistance. So what's more than likely going to happen is we will probably continue to push up, and then by the end of the week, we'll pull back a bit. Why? Look. Same thing, tails, right? So if we have those tails, what can we say about the next week's candle? Down, push up. So look at what's going to happen. There is a possibility that we rip right back down with GJ, right? So we go from 147,921 to maybe 147,253. But projection for the longer term is up, because if we look at the monthly, you can see the monthly wick just got filled. This sucks because I have too many lines here. Let me do this. Why did it just give me the same freaking charts? Okay, that's better. Maybe it won't give me all this. But you can see here the monthly wick got filled, right? So this was our monthly wick from June. Here's July. We filled it at 147,921. Same idea. If you were swing trading this pair, you would be looking to fill that wick, because when we've seen it in the past, what's happened? The wicks have always gotten filled, right? We've always gotten filled. This wick has always gotten filled in momentum. The higher time frames are the same thing. They just go the opposite way. So what can we say if we're looking closely at this candle here? More than likely, monthly, because we're only at the 11th of July, is going to push up. Come over to here, maybe even fill this wick here. And what are we looking at? 153. So if you're swing trading and you believe that we're in bullish momentum and we believe that this is a demand zone, right? And we don't yet have a supply zone where, like you have that candle and that rejection, so that, you would basically say, hey, up and then down. So we don't have a supply zone yet. If you believe that, you could technically swing this pair to 153. Do you want to hold it that long? I don't know. What's your stop loss? What's your take profit? You have to do the evaluation. You have to figure out mathematically what your risk to reward ratio is. So you have to understand that at this point, there could be an opportunity for you to get in next week when there's a pullback. And as we go further up for the monthly candle, we could reach this level here and fully engulf this previous bear candle. Why? Look what happened here. Bullish or bearish? Bullish. So if we're looking at the way this happened, look at the way this is happening, right? We could do the same thing. All you're looking at is you're looking at patterns. Went down, came back up, right? Then we had trend up, trend up. Wicks were always above. So once again, wick, wick. So August, wick stops, we go further up, right? As long as the wicks do not go below the next one, we're in an uptrend, right? You look over here and say, well, Ted, look, this was bearish. Yes, but didn't break this wick. We didn't have another bearish candle to go down, so it continued up. This wick higher than this wick. Keep that in mind. It doesn't matter what time frame you're on. It's just looking at information and saying to yourself what makes the most sense, right? So we go to 30-minute time frame. Right? So we go to 30-minute time frame. Wick, wick, wick. See this wick here? Still higher than this wick here. Still higher than this one over here. So maybe this is your support level for 30-minute. We don't know yet. Okay? You don't have enough confirmation. Sure, take sells off rejection. Go this way, playing with fire. Why? Because you're at a support or a previous resistance turn support. So maybe this candle rifles back up just like this one did, right? So that's what you're looking at. When you look at these trades and when you look and you say to yourself, hey, what makes the most sense? You have to do that. So people want thoughts on UJ. Same idea. I just went through all this. The idea, once again, is look at left and look at what you're hitting on the daily. Right? Can we go to 113? Sure. The idea, once again, is understanding how the candles are going to finish based on what you see over here. Okay? You know that there's issues here. You know, you can see it. So you know that there could be a pullback and then this candle continues to push up on the daily. We know that we always have to see a pullback with all this information. And what I mean by that is looking at the pair, you can always see rejections, wick rejections. There's always wick rejections. You have to be aware of that. And Rakil says this all the time in all his webinars too, says the same thing. When we look at what's going on, here's your daily charts, right? And you can see tap and rejection. Looks like we were going down. We didn't. We rejected, pulled back up. Why? Because we were right in this area. Okay, you can see that. You can see all that information. You can see that this was another area that we were in. It's just important that when you look at the candles, you have to say to yourself, does it make sense for candles just to look like this? When are you going to have candles that are just going to look like this? No wick. There's none of that. It's just body, body. There's never been any candles here. So this is your information. When you look at trading and you look at trading, look, wicks, 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 wicks. Always wicks. Yes, there's always wicks. So when you look at that, you have to realize that even if this one pulls back, that doesn't mean that we're now going down. It just means that the next candle creates a wick and we go further up. But it doesn't also mean if the candle forms like this, where the wick is at the top here and this is the body, and now we're going bearish. Look, see what happened here? One day we dropped. Day two, we went up. Why? Momentum. continuous momentum. You have 1, 2, 3, 4, 5, 6, 7, 7 days of momentum, right? You had out of 7 days, you had only 2 bearish candles. Momentum is up. Look at the difference here. 1, 2, 3, 4, 5, 6, 7. One bullish candle, 6 bearish candles. So which way is the trend going? Up here, which way is the trend going? Which way did the trend go? Which way did the trend go? Which way did the trend go? That's what you have to realize. You have to visualize this. So if we turn around and we look at what's happened here, we can all agree that we've broken out, right? So we've broken out to this point. But if we were to visualize, what do we visualize here? A valley. So forget all this. Forget all this. Don't worry about that. Just think of this. Actually, let me do this better. It's going to be easier for everybody. Think about this. Here's a line chart. We don't have any candles. We have squiggly line, right? So let me change the color here now. We have squiggly line, 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 squiggly line. Where should we be returning to with squiggly line? Squiggly line, squiggly line, right? Don't know how we're going to get there, but squiggly line says we're probably going to get to this point here. So with that being said, if we have squiggly line and that this point over here is a support, and we turn around and we draw that support across, we're tapping it a bit now. You know, it's a rough line. I apologize. So squiggly line is probably going to go squiggly line, squiggly line, squiggly line, squiggly line. Why? Look what squiggly line does over here, over here, over here, right? Squiggly line, squiggly line, squiggly line. That is what you're looking at. And when you understand what's happening and you can project and say, hey, that makes the most sense. Why? It's only another 100 pips, right? What do we know right now? USD, strong as hell. It's pushing up. We know JPY pairs are crazy. So we know that we could get that crazy movement. It is possible. It is possible to get another 100 pips this week. Will we? We don't know. But at least if you know that squiggly lines finish over here, that perhaps when you do your squiggly line right over here, maybe you end up at this squiggly line over here. Look, it matches. And then you can say to yourself at that point, okay, I'm in profit. I'm not in profit. You know, what can you do to say, all right, what makes the most sense? Do I exit? Do I hold? How much profit do I want? How much risk am I willing to take? That will allow you to get to this point here. If you're not a risk taker and you get to this point and it pulls back, exit your trade. It's okay. You took profit. And then you say to yourself, okay, I have to wait till we get maybe to this point, or I see clear rejection going back down, right? That's all you have to remember. I've always had trouble with movements in different sessions. Rakeel stated Asia and New York move more the same direction and London does the opposite. Can you explain on this? How do I prove my understanding of this? Well, it's exactly what we just did here. You can see each one of these sessions and what their movement was, right? So we can look through each one of these sessions. We can see how the movement's gone through. So this is your 4-hour chart, right? So this is your 12 p.m. candle, your 8 a.m. candle, your 4 a.m. candle. Here's your 12 a.m. candle. You can see, right? At 8 a.m. we had a pullback, right? But the 4 a.m. candle pushed right up. The Asian session drove us right down, right? So Asian session pulled back down and went back up. So if you think about that, what's going to happen tonight's Asian session? Going to go down? What's going to happen tomorrow's London session? Go back up. You can see. You have to study these. There's no way to explain this. There's no way to say that every Asian session is going to be down or every London session is going to be up. You just have to evaluate how the market's been reacting and where is the market reacting at that level, right? We know that this is brand new. This is like, you know, we broke things. We broke resistance here. We can safely say that we're now up, right? We broke out of this little consolidation. We're up. So now we have to look and say, okay, Every time that's happened, right? We broke up. You have to look at candles that have done similar things, right? Here you go. 3 candles up, 3 candles up. What's happened over in this previous area here? Shit, we've consolidated before we've pushed further up, right? So maybe that's what's going to happen over here in the 4-hour session. We don't know that, but you can look at previous historical things and say to yourself, okay, maybe we went up. Okay, 3 candles, looking for 3 candles, looking for 3 candles. Not really anything here. 3 candles. Okay, 3 candles. We went up. 4th candle is really tiring, right? Where were we? We were close to this, but over here we weren't close to resistance. Resistance was far away, so now we got room to play, but when we were close to resistance, we knew we were pulling back. So here, as an example, if we use this area over here as an example of this over here, we can then say to ourselves, okay, logically speaking, we just saw what happened, so maybe there's going to be a bit of play over here where we consolidate and then we break further up, right? Just like on the daily, we did that. We had this one big candle that broke up. What happened over here? We had one big candle that broke up. Next candle was sort of stagnant. And then it sort of continued on its way. Big candle break up here, we went further down. We were further away from resistance, so now maybe this candle basically starts to trail down a bit before it goes further up, the next candles, right? Look at where you see similar things happening and then what happens next, right? Always look at that. Those are things that you have to understand and you have to anticipate. That is what makes you a trader. You're not just looking to take entries and exits. You're thinking logically. As a poker player, if you are playing cards, you don't just look at your 2 cards and say, I have pocket 3s. Pocket 3s are no good. You don't know that. What if you have the chip lead? What if you are last to act? What if the table's very tight? What if your opponents are bad? You have to look at that. It's the same thing when you're trading. When you do analysis, you have to say to yourself, okay, what's happened previously? What do I expect to happen now? What if it doesn't happen? What if it does happen? Where am I exiting? Where am I entering? What's my stop loss? What's my risk? Do I want to risk more? Do I want to risk less? Is 113 a big level? Looks like it because we haven't been there since January, right? So you know what? Now we're coming on 7 months. So maybe this is at that point we come back to this point. It's taken us 7 months. Now we're back at 113. We don't know. So you have to be very conscious of all these various things. And if you can't remember this innately, you have to keep training your brain, you have to train your eyes, and you have to train your mind to keep all these things running tally in your head. It's exhausting. That's why people don't like trading all day. And that's why I don't understand how people can trade all day. Because if I was looking at charts like this all day, going through all these different ideas in my head, I would be having brain cramps because there's so many things to take into consideration, and you're not doing that if you're trading the whole day and you're looking at the exact charts. All you're doing is you're gambling and you're saying, well, it's an uptrend, so we're just going to keep going up. But where do we stop? What happens? Do we know? How are we going to do it? Where are we in the session? What's the hour candle looking like? Are we pulling back? Is there no volume? Where's the volume going to come from? What if there's news? What's the news going to take us? If Trump says something stupid, where are we going? If Trump says something great, where are we going? How much can I afford to lose? If we go down, how much further are we going to go down, right? Perfect example, like I was saying with GJ. As soon as we had this minor stupidity thing with GJ, yeah, on the 5 minute. Where was it? Was it on the 5 minute? Yeah, here it was. Yeah, this thing over here. Look at this stupid candle over here. You know, basically, you can see where I entered. It was an entry for me, but you can take a look, right? So here's where I entered. Look at that. 30 pip drop. Okay? Do you panic or do you hold? Everyone else was panicking. I was holding. Why? Because it didn't make fucking sense. It doesn't make sense for it to drop like this when everything else is on an uptrend. Look, failed to break, failed to break, failed to break, failed to break, failed to break. All of a sudden, this is now going to plummet all the way down here? Come on. That's manipulation. This is market manipulation. But if you're not recognizing that, if you're not understanding these small little identities, uh-oh, time to kill my trade and I just lost 30 pips instead of now I gained pips, right? This is what you have to realize. And these are things that when you experience charts and reason why you want to trade one pair is because of that reason. Look exactly what's happening here on the 5-minute chart. We've come back to hit support. Oh, look, Ted, see downtrend, should have sold. Look, 148, key level, sell, sell, sell. Yeah, but look where we are. We're right back. We're down, 80 pips, 90 pips? And look what's happening now. We're stuck. So where do we go? We could possibly be going up, but we don't have confirmation yet. So what do? We wait. Thoughts on gold? Sure. Let's take a look at thoughts on gold. Here you go. So what's happened with gold? Pretty straightforward, right? There you go. Oh, no, There you go. And if you want to complete the trifecta, Zink, there you go. There's your gold analysis, right? Clear rejection, drop, daily wick fill, right? Momentum, down. UJ, up. There you go. This is all you should be doing. This is all you have to look at. This is all you have to review and figure out what makes the most sense. It's coming in on my support line. So now what do? Oh, I guess we'll wait. Because look, we're over here on the daily. So now we go to the weekly. Weekly resistance or weekly support. Okay, if we're looking at the next support level, where are we going? So here we go. So let's take a look. Maybe there. Yeah, here you go. That's probably good. All right, you got a lot of rejection over here, but once again, when I look at that, similar to what someone pointed out, you have this area here, this area here, this. So we have to break this rejection, and then you figure this would be our first demand area right there. So we'll probably drop into that point there. We continue with the weekly further in. Okay. Monthly, you can see monthly, we're sort of, on the monthly, you can see we've tapped monthly resistance or monthly support as well. There you go, but look at all this. All right, so more than likely, all this area should probably fill back over here to that support. And here, you want to get really fun? Here's a bunch of supply. Here's your demand. Oh. Surprise. Triangle of power. Someone hold gold till 1100. Be a champ. Put a penny lot in and hold it till 1100 and really fuck everybody. Okay? There you go. If that's what you really think, there's your supply level or your demand level and your supply, and then we'll return back to that demand level and enjoy that. There you go. Monthly trade. Hold it for 6 months. Okay? So once again, these ideas can be applied to all time frames. And you can't be afraid of time frames. Higher time frames take longer. Yeah, it sucks. You got to wait a bit. But if we look at shorter time frames, you can see shorter time frames. Right? Zwink. Zwink. Right? Zwink. Zwink. So now what's going to happen? Maybe we go back up, go across, and then zwink, back down. Don't know. because where are we at? We're at major resistance. If you turn around, go to the 5-minute time frame, here you go. 5-minute time frame, Zlink, 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 right? There's all that idea every single place, right? Zlink, Zlink, Zlink. Triangles of power. And that's what I do. And that's the reason why when I look at trades, I'm not usually worried when I see something like this on a 5-minute candle, because it's like momentum. Okay, we pull back. Where are we going to pull back? I thought we'd pull back up to here. So, go a little bit higher, pull over here. Oh, we didn't go high enough. Then we go continue further down, right? So that's what you're doing. When you're trading, you're looking at things. You're saying, oh, what's the maximum we can pull back? That's how you're evaluating your trades. As you jump into the bigger time frames, same thing here, right? So you can see here, as an example, Zwink, all right, Zwink, okay. Where could we possibly return to? We could definitely return back to here, but we don't return, so now we know we're going back down. Come back here, Zwink, right? Don't have any sort of triangle thing here. Maybe this one could have been a triangle thing. Zwink, right? Zwink, Zwink. You go a mini one, Zwink, Zwink, Zwink. And then here's another one, Zwink, Zwink, Zwink. Right? When we have momentum, that's what's going to happen. Market's going to go like this. So don't be afraid of this pullback. Mark off where the previous levels were so that you look back and you say, how far is that going to pull back, and does that make sense? Okay. So hopefully that gave you some insight. Are there any questions? This is going to be scary to ask questions. So the market is always making a pizza. If that is correct, that is good. If that's what you believe, that's what it is, the pizza. I always think of it as an alien ship, that triangle alien ship that looks like this. Like I always remember it like this. That's sort of what I look like, right? See? Trading, all about triangles. That's sort of what I always look at that. All right. The end of a pullback, do you watch for special confirms? No, I'm looking, once again, I just explained it. When I was looking at the charts, I'm looking at price levels, right? So when you look at price levels and you say to yourself, what's happening? You're looking to see, where can this return to? Previous taps, right? That's what you're looking. If it continues, where can we return to? Previous taps. So what's my risk? What's my reward, right? If I'm going to turn around and I think that I take a sell over here, right? Because I expect to get 25 pips. I have to be willing to take 25 pips, way too much, right? This would be where I would get stopped out. I would get stopped out here, but it would continue back down and then it would continue further up. So not a good trade. But if I'm looking to get to support, that's 700 pips or 70 pips, right? So this is valid. 30 pip back, because you can put yourself in a 50 to 60 pip drawdown to get down here. Now, when you're doing that, the idea, once again, is you're saying this is my risk to reward. If I'm risking to get 70 pips, my stop loss has to be, it can be up to 70 pips, right? But if I'm going to go here, this would probably be my stop in this area here. Why? Because we can just clearly see all this consolidation, right? Came up into this box, came down. Maybe it'll come into this box again and then continue down, right? Because momentum is down. So that's what you have to be aware of. So those are your confirmations. There's no special candle that's going to tell you that. It's just where price levels are. What if price doesn't reach the previous level? Then you don't have to worry about it, right? Like here, perfect example. Here, price never reached back over here. So, hey, we just continue down. Look at where you are in your time frames. Look at where you are in your session. We're coming to the end of the session. It's almost 4 o'clock, so there's been a push. Not a good time to trade, and that's about it. It's you're figuring out when the most opportune time is to trade, and that's where the most volume is, and that's where you have to look. Is if I'm trading Asian session, I know the most volume is from like 6 p.m. or 6:30 p.m. Eastern to like 10 o'clock. That's it. London session, maybe starting around 2 a.m. Eastern all the way till like 11:30 a.m. Eastern, right? Because it's going to have the New York overlap. New York session, you're looking at maybe 7 a.m. Eastern all the way till like 2 p.m. Eastern, right? And then it starts to die down. So you have to evaluate that, and this is where you have to back test and you have to look at these things. These are ideas you should have in your head all the time. You should already know all this stuff. The reason why I'm doing a webinar right now is because I know no one's trading. There's nothing to trade right now. It's 4 o'clock in the afternoon, nothing's going on. It's a good time just to look at the market when it's moving live and get an idea and a sense of what could be happening. Okay. So there you go. You guys have a good day. Enjoy. I'll put this in the drive. I'm starting to migrate stuff over to the new site anyways. So that will be there shortly, and then we'll have the announcement, and I'll do a webinar about how to get into the site as well. So it's not up yet, but it will be up shortly. All righty.